All right, welcome everyone, welcome. I'm starting to stream a little bit early this time around, so hopefully you guys don't mind. And I know I tend to have more people coming in when I am live, like around this time, so around 6 to 6:30 p.m. Pacific Standard Time, or 9 to 9:30 p.m. Eastern Standard Time. I know for all my Central and Eastern people in that time zone, in those time zones, like this earlier time a lot better. But hopefully anyone in the Pacific time zone here won't mind. All right, I think my audio is okay here. I think we're set to go. All right, I'll just begin right away. Actually, let me send one more message to the CFO Discord chat room, this private chat room. If you guys want to join, make sure you guys check out the description box down below. You guys find that second link there. Again, you guys can become a part of the private CFO Discord chat room by becoming a reader of the CFO report. Okay, we say this every single live stream, or as often as I can, since everyone is always asking me where they can join. So okay, I sent my message there. Alright. Okay, alright, so what's up, guys? What's up? Hello everyone. Welcome. I see people joining in. Let's wait 30 more seconds. How about that? 30 more seconds. Alright, well, let's get started. Okay, so tonight, actually, we're gonna start talking about a little bit more on technical analysis. So I used to do a lot of these technical analysis live streams back in like 2021 and 2022, and I really wanted to revisit this topic because a lot of people are always wondering how I'm able to have such accurate levels, because again, levels do matter, but at the same time there's a lot of different nuances regarding that topic of just finding levels alone. So we kind of wanted to do a little slight deep dive into technical analysis and just the really basic fundamental steps to really mastering finding levels and just figuring out these different chart patterns, right? There's a lot of similar chart patterns out there. There's a lot of synonymous names for chart patterns, even though they essentially mean the same thing. Or there's a lot of particular chart patterns that appear very frequently compared to other chart patterns in the market. So we'll talk about those as well. All right. Okie doke. So let's first start out with levels. Okay, so this is probably the most important thing. Hey, what's up, guys? Welcome in. Make sure you guys hit that like button as you're coming in. So let's get one thing first. Okay, so there are two different types of levels. Okay, let me bring down the volume here. Let me see if my audio is okay. The playback here should be providing me the audio. Okay, perfect. So when it's considering levels, all right, there are essentially two different types of levels. One is horizontal, and the other one is the trend lines, right? These angled trend lines. And the angled trend lines themselves also have two different types, right? We have the descending one right here, right? It's declining downward, and we have the ascending slope trend line, right? So there's a positive slope and then a negative slope. So essentially, those are the two levels, right? We have horizontal levels and trend lines. Now, when it comes to the more important level, right? I would say horizontal levels completely trump these descending and ascending trend lines. Okay, because and again, it also depends on the context, right? Because when we're looking at trend lines, that could also be trend lines that are a part of a wider macro chart pattern that you're looking at. For example, like here on SPY, these two trend lines, yeah, they're important, and they make up the triangle or wedge chart pattern, right? So, but horizontal levels, on the other hand, are way more important because they constitute actual numbers, right? They're the actual numbers, and usually the way that you practice technical analysis and finding these whole number levels, or excuse me, I went ahead of myself there, but finding these very good levels is by looking at whole numbers. Okay, so the markets love to use whole numbers, and now you might be asking yourself, wait a second, so how does that even happen, right? Why do markets gravitate towards these whole number levels, and why do buyers and shorters always look at these specific magnetic numbers called whole numbers? Okay, well, first of all, whole numbers are very easy to use when you're filling an order, right? When you're typing out an order on your computer screen, whether it be for a buy, whether it's for a short, whether it's to close a position. Just putting, for example, $700, right? 700.00. That's the easiest way to, well, fill out an order, right? So it's very common sense right there, right? Very, very, very common sense. So that's quite literally the reason why whole number levels work, and that's the reason why we see a plethora of whole number levels being used as major horizontal levels of support and resistance. All right. Now, there's another reason why these horizontal levels work really well, and they're a lot more important compared to trend lines. So first of all, as I've said earlier, when we're talking about the fact that whole number levels are used because simply due to the fact that they're very easy to type out, right? As you're filling out the order for a buy order or sell order or stop loss order, whatever it may be, right? There's a lot of volume on those specific horizontal levels. Okay, so for example, right here, let's look at SPY, right? So 749.50, this is yet another whole number level. So in my personal worldview, I like to say that 0.50 and 0.00, okay, so 50 cents and 0 cents are whole number levels. Okay, I know there's a lot of people who will say, hey, okay, that's not something that will ever work in a numerical world, but okay, just hear me out, okay? So I would say these 50-cent increments actually work out very well in trading. So especially when you have a lot of size, right? You have a huge amount of shares that you're trading with on a specific ticker. So when you're looking at whole number levels, okay, whether it's at 749.50 right here, there's going to be a lot of, well, it's going to be a big bag, a mixed bag of different order types. Excuse me, guys. It's going to be filled with either stop losses, right, buy orders, or short orders, right? So there's a reason why a lot of turbulence occur around whole number levels, and you can see that here clearly at 749.50. So in the last, well, just right here, so in the last 6 trading days in this range here, we saw a lot of buy orders coming in, right? And we pushed, and the price was able to push up higher, and the price was bid up higher over the 749.50 level, and then eventually sellers start to come back down, right? Because it sounds like, hey, let's try to bring the price back down to this 749.50 level, and then buyers met those sellers and pushed the price right back over it again, and that was a constant fight back and forth, especially around these 3 candlesticks, and eventually at some point one side has to win, right? And again, there's also stop losses mixed with the buy orders and short orders, right? And so those stop loss orders are also for both the buyers and the shorters. So again, a lot of different contests that's going on and a lot of turbulence that occurs because of that contest going on between these two groups. And like I said before, the entire markets are always a dichotomy, right? There's a bifurcation of two different sides, right? There's always a bifurcation of a trade idea. It's always a bifurcation between two groups, and it's always going to be two groups, right? It's a dichotomy and two different ideas, right? Two different trade ideas, two different biases, right? Biases. So in that sense, right? Now you might be saying, okay, well, then how do these whole number levels become levels? Well, right, exactly what I just described here, right? So this constant battle is what creates these whole number levels. Now, I know a lot of people like to use different type of candlesticks as well, right? I like to use the basic candlestick chart, right? These bars here, but there's a lot of different people who like to use, I believe it's called like Heiken Ashi or something, right? So take a look right here, right? This is the, right, there's the Heiken Ashi. I'm pretty sure I'm saying that wrong, but that's all right. There's a line chart, whatever it may be, okay? So what I'm trying to describe to you guys is that when you're looking at making these specific levels, okay, try to focus on the actual shadows here, right? So the wicks, the bottom wicks and the top wicks when you're making levels. Okay, I know this might sound very, very fundamental and very textbook, but yes, this is exactly how you do levels. And you might be saying, okay, why? Why can't we just use the actual bodies of the candlesticks? Right? Well, why do we have to use the wicks? Great question. So the wicks are actually describing the history of what occurred on that specific candlestick on that specific time frame. So on this time frame here, this daily time frame, we're looking at each individual daily candlestick, right? And that is equal to one single day of trading. And what you're looking at with the top and bottom wicks is the history of buyers and sellers constantly struggling to control the price action. So for example, when you have a long bottom wick, for example, like on this candlestick, okay, you should be able to understand that at some point on this specific candlestick, on this specific day on June 9th, there was obviously a lot more sellers that were in control of the price. But then later on in the day, we were able to see that buyers came in and pushed the price right back up higher. Now, for anyone who's new to trading and still learning technical analysis, you might also ask, well, Andrew, how do you know that the buyers came in later on in the day? Well, take a look at the closing price. All right, so the closing price was at 737.05. Just take a look at the left corner here, guys. Look at all this, right? We had the open, high, low, close. Okay, so on this candlestick, the closing price was $737.05, right? So the low on this candlestick was $722.59. So that's how you know. You base it off of the closing price every single time when you're looking at each different wick, bottom wick and top wick, to know when buyers or sellers could have come in. So in this case, buyers came in a lot later in the day because we closed all the way up here compared to the low of the day on this candlestick, right? It's a very massive difference here, right? Wide distance from the low all the way up into the closing price. And that's the reason why we got this massive bottom wick or bottom shadow. And that clearly explains that there was a lot of buyers trying to come in. And this also aligns with this horizontal level, right? Do you guys see the 732 level right here? Right? So this green line, this is a whole number level, 732.00, 2 zeros, double zeros, right? So the price was able to come back over it because it just at some point, the selling got too extreme and buyers just had to come in and bring the price back up, and they continued to bid the price up higher until we saw 732 being reclaimed. Okay, so that's another way to look at horizontal levels and the reason why they're so significant compared to trend lines. Now, we can use that same logic for the upper wicks as well, the upper shadows. Okay, so for example, we can just use the next candlestick here. So this is yet another pretty wide, long, not wide, but long vertical upper wick or upper shadow. So in this scenario, you can say that, okay, so buyers came in early. Okay, so for example, we can just use the next candlestick here. Are we back? I think we got a slight disruption there for my connection. But hopefully you guys are able to... Are we back? Okay, hopefully we're back. I don't really hear on my replay here. I think it's still loading. Okay, there it is. I think we're back, hopefully. Or are we still having trouble here? Okay, let me reload, guys. Give me a second here. Okay, I think the connection is just a little bit poor. Okay, I think we're back. Okay, perfect. Okay, I think we're getting connection. Alright. So as I was saying here, okay. Hopefully connection's still good. Okay. So on this candlestick here, right, we have the upper wick or the upper shadow. This is indicative of the fact that there are early buyers, okay, and eventually we hit some sort of resistance. Now in this case, I would say we hit a resistance around 738, so another whole number level, but this level was most likely from an intraday level, because we don't really see exactly this level very significant, maybe around here, right, maybe around here and here, but it's more likely from a local perspective, right, from the price action from here. So if you just take a look at the intraday time frames, and this is where you have to switch time frames here, guys, to really see if there's a level, if there is a level on the intraday time frames, because you have to say, hey, so why did the price reject here, right? So clearly now you guys can see now on a 2-hour time frame, right, you just have to go lower and lower, lower on the time frames, so smaller on the time frames to really understand what's happening. So on the very next day here, we saw that there was a very good amount of sellers that came in the day before and here as well. So when the price bounced from 732, right, as we saw here, we saw a bunch of buyers coming in, right? The price opened up and buyers try to shoot the price back up higher to avoid retesting 732 again, because again, we just reclaimed this level the previous day, or the day before. And so the buyers came in and eventually 738 came in again and smacked the price right back down, right? Because there's a pretty huge amount. I mean, I don't think I have to really say anything about this, right? I mean, you guys can clearly see here, right? Just this entire selling that occurred right here, just right above 738. It's kind of obvious at this point that there was a lot of sellers, right? So it would make sense if buyers were not coming in droves, right? Sellers would gain control fairly quickly, and that's exactly what happened on this first 2 hour candlestick. So buyers came in early in the morning and it got smacked right back down as it hit an intraday whole number level, a horizontal level at 738. Okay, so that's exactly what occurred here. This is how you guys can actually learn technical analysis a lot more if you guys do this type of investigative analysis, right? So there's the intraday whole number level. That's where the buyers got immediately smacked to the side and sellers said, "Nuh-uh, you're not going to do this. We have control of the price above 738 and we're going to continue to move lower." And that's exactly what we did, and that's the reason why we have on the daily time frame. Okay, oh, where did my candles go? Give me back my candles here. That's the reason why we have this candlestick here, right? On June 10th, we have this nice upper wick or upper shadow, and just like with the same logic with the previous candlestick, the upper wick, right? I'm saying I know that buyers came in early because when you take a look at the closing price, the just the upper wick of where it's at compared to the closing price, you can clearly tell that sellers came in later on in the day. All right, but in this case, if you guys want to do more investigation into this specific day alone, if you go on the just like what we did right now, right, a couple seconds ago, if you take a look at the intraday time frames, you can clearly see that the sellers came in pretty quickly on the first 2 hour candlestick. Okay, so yeah, so that's the basis of why these horizontal levels are so important, right? And why it's pretty crucial to connect these levels by the actual wicks themselves and not by the actual bodies of the candlesticks. So when I say bodies of candlesticks, I'm talking about these rectangular shapes here that you see on the. So basically the width of the bid and ask fight that occurred on that specific trading day. Okay, so the wicks tell you the actual detailed story of where pretty important pivots occurred throughout one single trading day, depending on what time frame you guys are in. But since we are in the daily time frame, I'm saying a single daily trading, a single day of trading, right? So when it comes to these upper wicks and bottom wicks, you have to use those wicks as the critical pivot points, is what I like to call, right, to connect these levels. So if you take a look at 732, you see that there are multiple pivot points, right? And these wicks that are touching the 732 level. And usually when you have at least 2 to 3 touches of either a lower wick or upper wick, right, or again lower shadow or upper shadow, those are kind of the more textbook terms, is what I would say. But again, I would say the technical terms really don't matter as long as you understand what I'm saying or what I'm referring to. But again, wicks, shadows, everyone uses those same terms. As long as you understand it, you're good to go. So again, as long as there are 2 to 3 pivotal points, right, pivot points or anchor points, all right, it's the same thing. It's what I've personally made up. Then you have a level, right? So we have multiple hits, right? 1, 2, 3, 4, 5, 6, 7, right? And you guys can actually include this because, well, the level slices right through this actual very large lower wick. Okay, and you, like I said before, buyers came in very, very strong, and eventually they were able to bring the price right back up over 732. So this is a pretty quick and good lesson to understanding why using these lower wicks and upper wicks for making and connecting horizontal levels, horizontal whole number levels specifically, is very, very important, right? And again, you guys can see the same logic being exemplified using the top wicks, right? The upper wicks, the upper shadows with resistance levels here. So for example, my 749.50 level that I am revisiting now from a couple minutes ago, we see that there are multiple touches here, right? The upper wicks and even lower bottom wicks, okay? Here, and multiple times over here, right? So the upper wicks, bottom wicks, okay? So this is why I always say, if you really want to master technical analysis, at least once you've understood what the basic terms are and basic concepts are for technical analysis, start looking at some candlesticks, right? And do the charting yourself. Look at intraday time frames. I highly recommend you guys to stick with the 15-minute, 2-hour, and 4-hour time frames. I mean, you can even get rid of 4-hour, right? You can just maybe even 15-minute, let's say 15-minute, 1 hour, and 2 hour. Those are fine too. All right, but my specific combination that I personally like to use is the 15-minute, 2 hour, and 4 hour, right? These are pretty descriptive enough for me to understand what's going on. And oh, are we still live, guys? Oh, okay, we're live. Okay. Okay, there we go. Okay, there's a slight lapse in the connection. So when you're focusing on, oh, there it is. So when you're focusing on these horizontal whole number levels, right? All these horizontal whole number levels, whether it be resistances or support levels, focus on, again, the whole numbers, and focus on creating these anchor points or pivot points and connecting them, right? Just like connecting the dots when you're a child, right? When you're drawing in a book that has you connect the dots and you make a full picture, right? You don't know what the picture is until you actually connect individual dots that are numbered chronologically, right? So that's how you would be doing this. It's the same thing, right? It's technical analysis is more art than science, right? It's based on a lot of observational skills and art skills. It's a combination of both, right? So observational skills and artistic perspectives is a very useful tool to have for your eyes and brain. Okay, so now on the second topic here, and again, technical analysis, guys, is essentially considered a very basic form of analysis because of the fact that I mean, you guys can get to the small details of things and the nuances with math, considering math and stuff. But if you really want to keep it simple and keep it observational based, right? Like if you want to do analysis that has evidence, but it's based simply by using your two naked eyes that you have on your head, then technical analysis is the way to go. And it's essentially just filled with drawing horizontal lines and descending and ascending trend lines. And that leads me into the next topic here. Let's segue into the next topic, the ascending and descending trend lines. So these are the same, right? We have the resistances and support levels, except they're angled, right? In a negative slope or a positive slope. So when you're looking at making these ascending and descending trend lines, it's essential that you, again, use those anchor points using the wicks specifically. So for example here, we have the top wicks being used here. Let me even point that out directly. We have the first anchor point, the third anchor point, the second anchor point, and then the third anchor point right over here, right? So this is essentially a very critical level because we have at least 2 to 3 touches or anchor points that anchor and create this descending resistance trend line. And then the other side, we also have the first anchor point, second anchor point, right? And copy it, and we even have a third one right here, okay? And then a fourth one, right over here. And I can say there's a fifth one right here too, to be honest, from today. If I just adjust my drawings a little bit. Okay, now let me tell you this again, okay? Horizontal levels are more important than trend lines. All right, trend lines can be easily broken, right? And that's the reason why we see trend lines being broken. These specifically the angled ones, the descending and ascending trend lines being broken very easily, like we see here, right? So, and again, the only reason being is that horizontal levels are formed from multiple hundreds of thousands, if not sometimes millions, like on SPY here, of orders that create these whole number levels. Right? So they're a lot more significant compared to these trend lines, which again, I mean, they are important, and that's the reason why we see trend lines working, but that's kind of it, right? The reason that trend lines work is that, well, they become officiated by the price by either breaking below it or above it, right? So price broke above it, officiating this trend line, but price has still yet to break below this ascending support trend line to officially say, yes, this is indeed a trend line that we could have worked off of, right? So, yeah, I mean, these trend lines are the same thing, right? It's the same concept as these horizontal levels. You want to connect it with these pivot points or anchor points. And the more you have, the better, right? It means that the price has officially said, okay, there's something here that you should connect the dots, right? By creating a line through it, right? Through these dots in this specific order, because, well, it's a lot easier to see. And that's exactly what we're doing with technical analysis as well. It's not just an observational skill, it's also drawing it out of what you see. And again, this is a lot better analysis, an easier analysis, I would say, for people who aren't savvy with their numbers, right, with math. But again, there's a lot of complicated topics regarding technical analysis that requires a lot of different equations to come up with the specific ways of analyzing charts using technical analysis. You guys can do research on that if you want, but there's a lot of different stuff, okay? And when you're also when you feel like you're sufficient with the knowledge that you have with drawing trend lines at that point, the next thing that you want to do to really fully master the basics and fundamentals of technical analysis, decide whether or not you like SMAs or EMAs. Okay, so exponential moving averages, right? They are created a lot quicker compared to simple moving averages or SMAs. I talk about this all the time, right? So SMAs and EMAs are very, very important because, well, so many people use it. Hedge funds use it, right? Technical traders at hedge funds and institutions, they use it. And those are the people who really move the markets. And hundreds of thousands, if not millions of people, retail people, right? Retail traders use SMAs and EMAs. Hence the reason why we see SMAs and EMAs working so well. And the reason why SMAs and EMAs also coincide with whatever technical analysis that you've done. And again, when I say technical analysis, I'm talking about the drawing of your trend lines and horizontal levels. Does that make sense? Okay, now if you guys become stuck, for example, of whether or not you want to use EMAs or SMAs, ask yourself this one question, okay? Do you like more fast-paced trading or do you like more slow-paced trading? Okay, because EMAs exponentially, just think of it like this. When you're looking at EMAs and you're talking about EMAs, they're called exponential moving averages, right? Just think of it as exponentially quicker than simple moving averages. I know it's a very stupid saying, but that's the easiest way to remember it, right? EMAs appear a lot quicker on the chart because they're being calculated a lot quicker. Okay, there are specific equations for them too, for these two, right? EMAs and SMAs. I'm not gonna go into that again. I'm just simply talking about technical analysis here. Nothing about math. I know there's a lot of people who don't like math, including me. So, you know, when you're considering EMAs, you need to understand that these EMAs will make you want to act a lot quicker on your trades, whether it's entering or exiting, or even getting stopped out of. Maybe you have a tighter stop loss because you use EMAs, okay? And sometimes that might be the way to go. I know there's a lot of swing traders who use EMAs, right? And you might be saying, wait a second, aren't swing traders usually holding for a couple trading days or maybe a couple weeks at a time, or maybe even a few months, maybe like 2 months? Well, yeah. And again, it all depends on how your personality is, truly. I mean, if you like anxiety-filled trading, hey, EMAs are the way to go, right? If you like the fast-paced lifestyle of trading, right? I mean, that really is the way to go, right? But if you really like the kind of the slower paced, right? Use simple moving averages, right? SMAs, right? This is exactly what I like to use. It provides me a bit more of a bigger picture perspective. Yes, I know simple moving averages are also lagging technical indicators, but it gives me a pretty good idea as to where price could be headed to because of how my SMAs are being created. All right, I've discussed this topic quite a lot in different live streams, so hopefully you guys understand what I'm saying there. But essentially what I mean is these, for example, I mean, here's another great example on SPY, right? This daily 10 SMA has been basically flatlining, right, at the 749.50 level. And whenever I see my daily 10 SMA here, this red line, starting to flatline during an uptrend like this, when it's curling upward, I'm saying, uh-oh, something's happening, right? The current trend is not strong. And what was the current trend at this point in time? An uptrend. And that's exactly what we got from Thursday to Friday last week when we pivoted very strong to the downside and the daily 10 SMA began to actually start to curl downward by the end of Friday. And now, as it's curling downward, it has coincided with this resistance level, this whole number resistance level at 749.50. All right, so that's kind of how I use my SMAs. I use it in conjunction, right, parallel to my levels, my horizontal levels and my trend lines. So now the next most important thing here, if I were to hide my candlesticks here, all right, so let me give you guys even a much more deeper lesson here. The next thing that I'm looking at for SPY is that if you were to want to continue to go lower, if shorts are really piling into SPY, right, and they're starting to do that, by the way, guys. If you guys didn't know, the average volume is still down, but the volume bars have been slowly increasing. Yes, we see larger green volume candlesticks, but at the same time, as they're stepping up higher here, do you guys see this? Right? So if you guys don't see it, this is the trend here, right, of the volume bars. The selling red volume bars have been consistently getting larger and larger. And if you actually understand the context of this candlestick on Friday, you would know that this could have been a red volume bar, but thankfully, right, let me bring back the candlesticks real quick, the price was able to close. The closing price again was a lot higher compared to the opening price, which allowed the candlestick to become green and also allowing the volume bar to be green. So there's a lot of selling volume that was involved in this candlestick as well. So again, there's a lot of context and nuances involved with technical analysis, especially when looking at the relationship between a single day's candlestick compared to its volume. But as I'm sitting here telling you guys what is happening with the markets here, it's important to understand that volume has been beginning to move higher, which means we should be seeing some sort of volatility. Okay, so that's my little hint there. And selling volume actually increased again today. All right, now as far as the current analysis goes with SPY and the overall markets, it's also critical to understand that the next thing that I'm looking at is my daily 50 SMA here. This dark blue line is also beginning to flatline. All right, we're starting to see a slowing down of this uptrend, this usual nice curvature to the upside of the daily 50 SMA. But now we're starting to kind of top out here. Right, we're kind of curling up, and that's not what we want to see during an uptrend, right? We do not want to see that at all during an uptrend. So we're starting to see this. Okay, that's a huge if, obviously, if we start seeing this, but this is what's possible as we are starting to see the daily 50 SMA starting to, oops, right? Something like that. Okay, I know it's a very messy drawing, right? We could be seeing something like this. And once my daily 50 SMA begins to actually curl down, I would expect the price to have already curled lower and broken below this ascending support trend line. Uh-oh, are we back? I think my... Oh, are we cutting out? Oh, okay. Okay, so regarding this daily 50 SMA, right? I am watching this very, very closely for the next, well, this entire week, to be honest. Okay, so please watch out for that. All right. So yeah, if you guys like to see slower moving and slower creation of moving averages, then use simple moving averages, SMAs. But if you like the quicker version of those moving averages, right, use EMAs, exponential moving averages. The actual equations to make EMAs and SMAs are pretty simple and pretty logical, to be honest. So if you guys want to look at the actual equation is pretty self-explanatory as to why I'm saying that exponential moving averages are created a lot quicker. You guys can see why. Just search it up on Google, right? I don't think I have to explain it to you guys. Very self-explanatory. Even if you hate math, right? The equations are very self-explanatory. All right. Well, that's kind of it for tonight, guys. That's the literal gist of understanding technical analysis, and these trend lines can actually make specific chart patterns, right? For example, when you take a look at, if you just take a look at here, right? We have a nice rising wedge here, right? And we also have another triangle or just a simple wedge, okay? Trend lines do a lot of heavy lifting when you're looking at patterns, specific chart patterns to form. We have a nice bull flag here, a bullish pennant. Right, we have the nice flag pole here, and the flag is the actual triangular shaped wedge or pennant. Okay, so again, when I'm talking about the significance of horizontal levels and trend lines, all right, I'm not talking about chart patterns, but I'm specifically talking about how significant prices can react to either a trend line, an ascending or descending trend line, or a horizontal level, right? So, yeah. Very self-explanatory. Okay, so hopefully that makes sense, guys. And also, if you take a look at CRWV, right, CoreWeave, I also understand that $66 here is also a very, very huge horizontal level, horizontal support level, right? In the longer term, if you take a look at the monthly or weekly, okay, just shift your time frames here, and you guys can see which level is very, very important. And the price has been heading back down to the $66 whole number level, right? And there's also sometimes demand areas or supply areas where you can clearly tell that maybe if I would say maybe 70. How about that? All right, nice 4-point range here. All right, so 70 to 66. This could be a nice demand area. How do we know this? Right. Well, first of all, we've seen the price hit $66 way back here multiple times, 3 times in fact. But at the same time, we've seen prices coming back down, nearly hit $66 here like we did last week here and on this specific weekly candlestick on March 30th, right? But it didn't really hit $66, so now you have to hunt and say, not hunt, but well, yeah, you're hunting for the next level here, but you're analyzing it and looking at this and saying, well, there has to be some sort of level here that will make the most sense. And when you're thinking like that, you'd say, okay, well, what could be the next most logical whole number level that will be a magnetic level, right? What the buyers and sellers on both sides, right? Both groups will gravitate towards, and that will be, well, 70, right? It's the $70 level, a whole number level, a major level. So if you basically create this horizontal level here, it kind of makes sense, right? You guys can see that there is a nice demand area, and in fact, just on this specific candlestick alone, this one barely even tried to go back down to $66, right? And instead, it basically went slightly below 70, breached the $70 whole number support level and snapped right back up higher. And so that kind of validates the $70 level. And even just last week, I know this is a very long wick, but it also barely got halfway between this 4-point range between these two specific whole number support levels. And so this was yet another, last week was yet another evidence, another week of evidence that this $70 whole number level exists. Is this currently making sense at all, guys? Hopefully it is. Are you guys able to hear my voice at all? Okay, so the same thing can be done with supply areas as well, right? Just look at the top wicks, right? Determine, right? I mean, for example, I could just do one right now. Look at this. So here's a 122 horizontal level, right? Whole number level. And again, why do whole number levels form? Because it's a mixed bag of buy orders, stop orders, and short orders as well, right? And the way that these levels are formed is through the fight, the contest between the buyers and shorters, right? Constantly fighting, and in the middle of that, we also have a bunch of stop loss orders being triggered on both sides, right? So we have this 122 horizontal resistance level. Now, is there a supply area that could be potentially be looked for? Well, all right, I can scout one maybe around here, right? So 114 to 122, and yet another wide range. Okay, I'm just doing some on the spot analysis here for you guys. I'm trying to make it as accurate as possible here. Let's get to the actual number. Bam. Okay, so we have yet another large supply area. And guess what? This makes sense. Look at this. In the past, right here, we have this top wick and bottom wick, and the closing price was actually under this 114 level, which makes another validated, well, I guess just this wick alone validates this horizontal resistance level, this whole number level of 114. And there's another one right here, just within the vicinity of this level. We were able to see a nice quick move back up higher on this current trend at this point in time. And we see yet another one here, 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 and everything that has occurred over here, right? Just the fighting that occurred in these 4 candlesticks, right? Or maybe even 5. Yeah, 1, 2, 3, 4, 5. You can see that there is something going on here in between 114 and 122, right? So this is clearly a supply area that has formed, and obviously this candlestick, this one, and this one, right? These 3 very large volatile candlesticks with very wide ranges have obviously experienced the constant fighting between buyers and sellers between this 114 to 122 supply area, but ultimately sellers obviously won, right, in hindsight. So again, this is a supply area. That's how you find supply areas, by using 2 different horizontal levels. Does that make sense? And again, these horizontal levels have to be whole number levels. That's the reason why, the only reason why they're more significant compared to, again, trend lines, whether it be ascending or descending trend lines. Does that make sense? Okay, well, that's it for me tonight, guys. I mean, hopefully those brief interruptions that I was getting in the last half of the stream here weren't disturbing your stream watching here. But I just wanted to give you guys a quick masterclass on just overall fundamental basics of technical analysis, right? I'm always, again, getting these questions about how to make your levels look a lot cleaner, and how to know which levels are actually important. So that's really it. This entire video, it's a whole tutorial on how to master the basic fundamentals and basics of textbook, all right, technical analysis. All right, it's a mixture of art and science, but mostly art. All right, I would say it's a bit more of an observational skill as well, and being able to be artistic about it, using those observational skills and actually drawing those things that you see with your eyes. right, with your two eyes. I know it sounds funny, but that's essentially it. Alright, well, if you guys enjoyed this stream, make sure you guys hit that like button down below. And if you are new here, make sure you guys hit that subscribe button down below as well. And hit that notification bell once you hit that subscribe button. And that notification bell will pop up right after you hit that subscribe button. So make sure you guys do that as well so that you know when I'm live every single trading week. And when I have uploaded a new video, whether it be a long form video or a shorts, okay? And again, I highly recommend you guys to watch my shorts. Just click on my channel here and go to the shorts tab. Right, it's the very third tab. It's very hard to miss. It says SHORTS, shorts. Click on it and look through my videos. They're very, very informational, and it will teach you something like every other videos that I have put out on this channel since its inception. Okay, so please watch them as often as possible. Alright, well, have a great rest of your night, guys. I will see you guys on Wednesday at the same time at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. But if you guys are enjoying these earlier times, I am completely fine with moving. Yeah, I'm completely fine. I don't think I'll have a problem at all, but I'm completely fine moving the live stream time to about 2 hours earlier to 6 p.m. Pacific Standard Time to 9 p.m. Eastern Standard Time. Alright, so again, make sure you guys smash that like button down below if you guys learned something, or maybe relearned something, or maybe revisited your technical analysis skills thanks to this video. Whatever it may be, whatever the reason may be, if you guys really overall just enjoyed the content that I'm putting out here for you guys on each single stream, and if you guys really learned something, please hit that like button down below. But if that wasn't you, that's fine. You don't have to hit the like button. The ball's in your court with what you want to do with your fingers and tapping whatever button that you want to tap on your screens. So yeah. Again, the liking part really just helps out with the YouTube algorithm. So if you guys can just take a second out of your time to like the stream, that would be great. All right, and of course, subscribing even helps more. All right, I will see you guys on Wednesday. I'll probably have a shorts video out tomorrow as well, so watch out for that on the YouTube channel, and that's another reason why to subscribe and hit that notification bell icon as well. But yeah, I will have a short video out tomorrow. It's going to be resuming my robotics series that I'm talking about and have been talking about and began a couple weeks ago. So please watch out for that tomorrow afternoon. All right, have a great rest of your night, and I'll see you guys on Wednesday. Good luck, guys.